Hey traders and investors, it's Serge Berger here. What I'm going to talk about today is the potential downside that General Motors stock price has here in the near term. And if we take a look at a very simple uh, daily chart here of General Motors, the very first thing that you'll note that is from the lows in 2012 up to the highs last December, the stock has roughly doubled. So around from 19 bucks, actually more than to over $40. So more than a double. But what then happened with the sell-off that we saw in as the new year came about is that this entire downtrend or trend higher actually broke. Okay, and it broke here in January, and then eventually what happens? We saw a classic retest of this black line that I just drew. So if you look at this, you have sort of a 1, 2, 3 formation. And in my opinion, this third wave here isn't yet quite done. We came in and basically retested the underbelly of this line, which is classically a bearish thing for a chart to do. Next thing is, and I've heard a lot of other people talk about this because it's the simplest thing to see visually, is that we are currently also forming this head and shoulders pattern. In fact, we've completed it, and we're now trying to sort of work it to the downside. But you can see if you sort of envision the right or the left shoulder here, then you have an exhaustion pattern up here, which is the head, and then you have a right shoulder, all of which should eventually lead to a move below this neckline, which is that blue horizontal that I just drew here as well. So that's a second bearish pattern on the chart that I just drew. And then thirdly, and for my purposes, probably most importantly, is what we're seeing here in terms of the measurements from the top in December down to the lows in February. And if we take a measure of that, you'll see that in this rebound that we saw in February, General Motors basically retraced just about exactly 50% of the sell-off. So it came down and then rebounded 50%. What then happened is that this 50% retracement area is also at the time we had the confluence resistance area made up of the 50-day moving average, which is the yellow line, and the blue 100-day moving average. So we had confluence double resistance made up of 50% retracement area and these moving averages. Ultimately, the stock, you can see, has then respect this resistance area, now looks to be going lower. What I usually tend to go for then is a very simple 23 0.6 or maybe 24, 25% extension of this entire move. So we from this move we add 23, 24% to the downside, gets us to about 2250, maybe 2270 or something like that, maybe even 33 depending on how closely you take it. My broader point is that you have three specifically bearish things happening here, all within the confines of the same sort of topping, medium-term topping pattern. In my opinion, the stock looks like it has room down to 33, probably even to $32 as a downside target here over the next few weeks. Maybe it's going to take a couple months. Remember, we do have pretty good support here from this neckline that I drew here just a few minutes shortly in the video. So $32 certainly looks like a potential downside target before the stock can find better support. Hope this makes sense as always. If you got any questions, you can tweet me at my Twitter handle, which is SteadyTrader. Take care.